The second economy in terms of where we stand in terms of robustness or cyclicality, I think, is Japan. And before the tariffs in particular, Japan looks like it was a really interesting spot. And there was a few things that stand out. So first is that the economy is being led by services. So the manufacturing sector hasn't been doing very well and won't do very well because of tariffs. But really, that's been the case over the course of the last 6 to 9 months. The economy has been doing relatively well because of services. So it's a very unusual cycle in Japan because it is so particularly led by services in a way that hasn't happened before. So that's one feature of Japan's economy today. The second thing in terms of the data that we've been seeing is this broadening of inflation that's been happening. So inflation has actually picked up once again and is above 3%. So inflation is not low in Japan at the moment. But the interesting aspect of inflation is how much it's broadening out. So previously, during the pandemic and the initial rise in inflation, it was all because the yen was weak and import prices were rising, pushing up the costs of goods domestically. What's happening now is core inflation is rising a bit more, and core inflation is also becoming broader. So in particular, in the course of the last few months or so, rents have started to rise within the CPI. And that's a very important development in Japan because rents are about 20% of the overall index. And for the course of the last 20 years or so, rents didn't move at all. So for the BOJ to reach its 2% inflation target and for inflation to remain sustainably strong in Japan, it's very important that rentals do start to rise. And that now is being seen in the data, particularly in terms of the Tokyo numbers. So a couple of things that stand out in Japan, that the services sector is stronger and leading the cycle, and second, core inflation is broadening and becoming stronger. The third thing that's important in Japan is wage growth. And the data, like the official data don't come out, official data are a bit lagging, but in some of the private sector indicators for the labour market, part-time wage growth in March was very strong. So one indicator suggesting that part-time hourly wages are rising by about 5.5% year on year. Really, that hasn't been seen for years in Japan. And that matters for a couple of reasons. One, because it's higher than inflation. So you have part-time workers now getting real wages growing for the first time in a few years. And the second thing is because that is an important indication of the overall labour market.